Hello and welcome back to the MicroLearning Institute. In this short tutorial we're going to look at the fundamental principles of IAS 23, borrowing costs. Borrowing costs may include 1. An interest expense calculated by the effective interest method. 2. Finance charges in respect of finance leases recognised in accordance with IAS 17 leases. And 3. Exchange differences arising from foreign currency borrowings to the extent that they are regarded as an adjustment to interest cost. A key definition in IAS 23 borrowing costs is that of a qualifying asset. And a qualifying asset is an asset that takes a substantial period of time to get ready for its intended use or sale. A qualifying asset could be property, plant and equipment, and an investment property during the construction period. It could be intangible assets during the development period, or it could be made-to-order inventories. IAS 23 states that borrowing costs that are directly attributable to the acquisition, construction or production of a qualifying asset form part of the cost of that asset and therefore should be capitalized. Other borrowing costs are recognized as an expense. In terms of measurement of the borrowing costs, where funds are borrowed specifically, costs eligible for capitalization are the actual costs incurred less any income earned on the temporary investment of such borrowings. Alternatively, where funds are part of a general pool of funds, the eligible amount is determined by applying a capitalization rate to the expenditure on that asset. The capitalization rate will be the weighted average of the borrowing costs applicable to the general pool. Capitalization of borrowing costs should commence when 1. Expenditures are being incurred, 2. Borrowing costs are being incurred, and 3. Activities that are necessary to prepare the asset for its intended use or sale are in progress. Capitalization of borrowing costs should be suspended during periods in which active development is interrupted. Capitalization of borrowing costs should cease when substantially all of the activities necessary to prepare the asset for its intended use or sale are complete. Thank you for visiting the MicroLearning Institute and for watching our introductory video on IAS 23 borrowing costs.